Fixed assets, retirement, scrapping, write-off, and sale all use the same process in SAP S/4HANA. In the video today, I will explain the different business cases and the financial entries included. Let's take an example. In 01/01/2020, we purchased an asset for the value of 40,000. This asset has a useful life of 4 years, so it should be over by 31/12/2023. When posting the fixed asset acquisition, the financial entry is a debit to fixed assets and a credit to the supplier accounts payable or cash. Then over the useful life of the asset, every period we post the fixed asset depreciation, and here the accounting entry is a debit to the depreciation expense and a credit to accumulated depreciation. The fixed asset acquisition value is displayed in our balance sheet under assets in a positive value, and accumulated depreciation is also displayed under assets but with a negative value, and the balance is the net book value of the asset. At the end of the useful life in 31st December 2023, the asset is fully depreciated and the net book value of the asset is 0 because the acquisition value is equal to the accumulated depreciation. But we can still see the asset in our books and it will remain there in our balance sheet. We can see it in the acquisition value and in the accumulated depreciation. Now we want to throw out this asset because it's no longer useful and we want to write it off from our books. How can we do this? This is our first business case, which is a full write-off or a full retirement of an asset that is fully depreciated. Here we are going to post the write-off and the accounting entry will be a debit to the accumulated depreciation and a credit to the fixed asset acquisition value. And since these two are equal, the financial entry is balanced and we don't have any other accounts in this entry. The second business case is exactly the same, but instead of throwing out the asset for free, we are going to sell it as scrap. So for the same fully depreciated asset in 31st December 2023, we are going to sell it as a scrap and we are going to receive some revenue. Let's say we sold the scrap for 500 USD. Here the financial entry will be first a debit to accumulated depreciation for 40,000 and a credit to fixed assets for 40,000 because we have to write off the asset from our balance sheet. Then we have a debit to cash or bank transfer or customer account for 500. This is the amount we are going to receive for the sale, and a credit to a revenue or a gain account for 500 USD. So this is our second business case, and we can call it fixed asset disposal against revenue, write-off against revenue, sale against revenue, or retirement against revenue. They are all the same thing. And when we do the fixed asset sale, it can either happen directly in finance, so we post all the transactions in finance directly without any sales order, or it can happen with collaboration with our sales colleagues, and we are going to create a sales order, then post goods issue, then post billing. It will follow the same order to cash process that I explained before. I will also show you